Hey, good morning, everybody. Happy Tuesday to you. Welcome back. We had kind of the extended weekend there with the holiday. Hopefully, you had a good time with your friends and family. I know that I was out at a national cemetery visiting with my grandfather. He was a retired Air Force and just went out there and made some additional memories. My grandmother is out there with him as well, so it's always kind of a bittersweet with the Memorial Day, but always a big shout out to all of our servicemen and women who risked it all and put it all on the line. Let's take a look at some GameStop flow. I know everybody got excited with that overnight session as GameStop opened around, or last night around 34.50. We saw GameStop close at over $33 on Friday. Had a lot of people excited. I know it was kind of excited. We had the high of 33.21. We had some option flow. I know we saw a little bit of that as well, about 17 million in net call premium on Friday. Pretty strong day in that regard with GameStop. We saw some of those call debit spreads being open for the 36 and 39 dollar calls for this week. Essentially, what they were doing last week is they were selling the $39 calls to finance buying the $36 calls. We shared that was part of a call debit spread. We saw more of those spreads on the puts as well. Quite a few spreads. So we'll take a look at some of that option flow, get you set up ahead, get you going here as we get ready for the market open this week on a short week because we're already here at Tuesday. So as we film at the video right now, that GameStop is running at, let's see, 33.72. Pretty strong close. Now we're seeing these levels here where we've been, aside from, kind of last year where things got a little crazy with the Gamma Squeeze and Roaring Kitty. And we talked about with those OTM call options, we're kind of up there in price. So we'll see. GameStop here kind of up there, in regards to what that chart looks like. So we'll just continue to watch it. At these levels before, we know what happened last year. Will Ryan Cohen sell any shares? Are they going to offer any convertible notes? I'm not sure what they're going to do. We'll just continue to watch that option flow. But pretty strong close um, on Friday there before we headed out for that holiday weekend. Take a look at that MACD and that RSI. It's pretty extended on the daily. It's 75. Doesn't mean that it can't remain extended, but just something to keep your eye on there. Even as we look at that weekly, pretty strong candle last week on that weekly. So weekly RSI around 66.91. So last year when the stock was doing the McDonald's McSqueezy, RSI on the weekly was running over 70, 72, 73. And then we had some of those offerings before the stock cooled off a little bit into the end of the year and then started to rally back. So let's take a look at that option flow. Let's look at where the bulk of that money was spent. Like I said, we talked about those call debit spreads last week as well that were being entered. Friendly reminder as well that the Unusual Whales sale ends tomorrow. So if you were looking to grab yourself an Unusual Whales plan, whether it be a flow plan or a portfolio plan, hit that link there, get yourself a discount set up until tomorrow. Just want you to save a few bucks if that was something you're interested in. We talked about, the spreads that we saw, the deep in the money puts being sold. I've been talking about, that gamma when the stock was trading at 26. Hey, this thing starts moving up to 27, 28, 29. I mean, gamma opens up at 29.30. Things get a little more exciting. And you saw it with the stock squeezed up to 33. A lot of those calls shifting very quickly into the money, which kind of created that gamma upside pressure. And we've talked about this many times during the videos here. So let's take a look at some of that option flow and break it down for you. Like I said on Friday, about 16.5 mil in net call premium. It was just off to the races as the stock closed above $33. So some of the highest volume contracts were going to be like the $32 calls that expired Friday and like your short dated 33s. 32s for this week was on the ticket. Those 36 and 39s, like I said, they were selling the $39 calls and financing to finance the 36. So I'll show you what they did. So essentially here on Friday, it was about 47 million, or pardon me, 47,000 volume. It's about 3.3 million in premium came through. They're like, hey, I saw some posts. They're selling the 39 calls. Well, when you use the Unusual Whales, you can detect, these being a multi-leg trade, and that's actually what was occurring. These were a multi-leg. So I'll pull that up here, and you can see on Unusual Whales, we can see all the particular legs here indicating that it was a multi-leg. So what was happening here, I'll pull up just one of them. because it'll denote that it's multi-leg for you. So essentially, it's a call debit spread. I'm selling the $39 calls and essentially using that to finance buying the $36 calls. It's a strategy, it's a call debit spread. And basically, what that looks like here, and I'll pull that up. You're just wanting to speculate on an increase in price with a neutral to small increase in volatility. So you don't want the volatility to change too much, but you're looking for just a movement up in the price. That's a particular strategy, and that's what you saw with those calls. So you saw they buy the 36s. Let's see, about 4.5 mil in premium there, and then finance by selling 3 million worth of premium. So sell the 39s, buy the 36s, all in one transaction. So it wasn't just like, hey, they're loading $36 calls, but they were in theory, in that they were looking for some upside there, uh, and minimal volatility change. So that's what we saw with those 36s and 39s. Let's take a look also at these $32 calls, because those are in the money for this week. We saw some of that activity come through Friday, about 6 million total premium. So of that 35,000 volume on Friday, about half of it, which is something you'll kind of like to see, appeared in new open interest. So traders may feel continued upside, or at least these calls going in the money and staying in the money for the expiry this Friday. So you can see a pretty large entries here, about 7,000 volume on that hit, and about 10,000. So that right here is probably what carried over into the open interest today. More than likely is this buyer right here, who dropped about 6 milli. Let's see, about 950 there. And once it's about 2.5 milli on the trade. And they bought those around $150 each, 140 each. They closed at 250. So they're going to almost probably double their money on that particular trade. Not too bad for a short dated. But we'll take a look at where the bulk of that actual cash was spent on the option flow on Friday, before we headed out for the holiday weekend. Well, I always sort it out for you here with the GameStop flow and just sort it by the highest premium. So, like I said, we already talked about the 36 and the $39 calls on the ticket as well. The $30 calls, which are in the money, they saw premium as well. So we're looking here at this higher premium. I try to look for things, 500,000 and more. And with the premium, we'll look at these 30s as well, that came in on Friday. You can see here about 20,000 in volume on Friday, 6 million in premium, but the open interest didn't increase, and in fact, it actually decreased. So some of this could have been buying and selling, and contracts trading hands as well. But if you note here on Friday, total premium 173 million. So it's a very large option premium day, compared to where GameStop had been. We haven't had a three multi-figure like that, 100 plus. Let's see, 159. That might have been around March 27th. So that was the last time we had kind of over the 100 mil in option premium. So kind of exciting to see that for GameStop. That brings the volatility, the FOMO, and drives usually opportunity to make some cash on the stock. Some of the others, higher, where the cash was spent here. You can see the premium if you want to pause or screenshot. And then you've got, what's your actual strike and the expiry. The $30 calls, we've been talking about that June OPEX. There was about 4.5 million total premium on Friday. Open interest did decrease a little bit, so some contracts could have changed hands. Some buyers could have taken their money and ran. Like I said, the buyers, sometimes when they buy, the contract will trade hands from the seller to the buyer. So the open interest may change, may be a little change. So yeah, you'll see that sometimes in that regard. So they're still there in that regard, because there still is about 30,000 volume, or pardon me, open interest on the $30 calls for June. So those are essentially in the money. And then we saw the 33s, which closed just in the money on Friday. We saw 25,000 volume and about 4 million in total premium, but it was kind of split. You had buyers and sellers as we were looking at the ask volume, and the bid volume is kind of half of the total volume. So that's why I always say kind of split between buyers and sellers. So while some were buying, some were also selling. But these got alerted actually on unusual whales, around $132 each in the morning, and closed up around $215. So pretty nice opportunity on a short dated, as the implied volatility spiked up, creating a little bit of movement there in the stock. So always interesting to see, and always fun to see. And then let's see here. We talked about, like I said, the 36 and the 39s, the 33s. These 35s are just slightly out of the money. They saw some premium as well on Friday, about 3 million total premium. And of the 26,000 volume, about 5,700 showed up in new open interest. That open interest did increase a little bit for this week's expiry, building into next week. And some of those were filling in the morning at $100 or $80 and went to 160, and they doubled. So not too bad in that regard. Saw some of these deeper in the money calls. July, I wanted to look at those as well. About 3 million in total premium, 2,300 volume, and 1,500 pure new open interest. So, for example, if you bought those, you might have exercised. If you sold them, maybe you got assigned, but maybe you were hoping to be assigned. It depends on what your strategy or the scenario is. I'm just trying to show, like what kind of the activity we saw within the stock there. Let's see, in those $30 calls also appeared for July. Let's see, there's about 2.6 million total premium. I saw 5,000 volume, but the decrease in open interest. So not a big change in that regard. And we can look at that gamma and everything. We'll take a look at that. But I'll let you take a look at what all was traded here. It's sorted here by premium. Here's your volume. Here's the actual strikes and then the expiry. We'll take a look here. Take a look at the largest changes to the open interest this morning so we can get you the most accurate, up to date information here. Let's pull that up real quick. That way we can take a look at the largest increases. So as expected was the 36 and $39 calls because that was part of that call debit spread. Those were your largest increases to open interest. They're all sorted right here by largest increase. 32s, which are in the money, and these $46 calls. So let's look at those as well. That's kind of wild. Yeah, because those opened on Friday as a new option chain. So yeah, 9,600 volume, 6,000 new open interest. So buyers and sellers on these $46 calls for this week, which are about 36% of the way out of the money. So somebody banking on some volatility maybe. Selling volatility as the IV is 191%, which is if you're selling IV at that high, that's probably not too bad of a risk. If you're buying it, that's a pretty big risk as well. So yeah, we'll see there. Let's see the 35 calls for this week. 40s again out of the money. 33s right there in the money. Some of those puts, 27 and a half puts for June. Let's take a look at that here. See 4,000. There was some buying of that. I did see that. So someone may be counting on the stock to move down or hedge in that regard. Let's see. They bought about 3,500 contracts, about $450,000 worth, roughly. So yeah, volume exceeded the open interest, so definitely a new position. It wasn't a multi-leg trade, but doesn't mean it wasn't connected to another part of a trade. So someone buying 27 and a half, 50 puts for June 13th, like I said, could be a hedge as well. I just always look for like the changes there to the open interest, see if anything jumps out to me in that regard. And we'll jump over and take a look at that gamma as well, kind of how that's built into this week's expiry and then building into June. So here were your biggest decreases. Some of the 30 calls coming off the table for this month and for June. But there were your decreases there as well. So you could pause or get a screenshot if you need. That way you got that data as well. So let's pull that GameStop back up here. We'll take a look at that gamma again. As we wrap up on the video, we cover that often. I think it's important to continue to highlight that for those that don't know or new to the videos. They can take a look. Basically, for every 1% change in the stock going up, and just basically gamma for this particular is long gamma, and then it's green here in unusual whales, and that they're long shares. So basically, every 1% price in the change, about $28 million there. In that regard, market makers need to hedge because spot gamma exposure is the assumed dollar value, a gamma exposure that market makers need to hedge per 1% change in the underlying stock. So positive value, which you saw here is green, is long gamma, and negative value is short gamma. So they've been long gamma for a while. Like I said, when the stock was trading back here at 27, 28, you had a lot of gamma built at 30. Basically, if the stock got there, it'd be a lot of calls in the money, which would induce, FOMO, more out of the money call buying, more volatility, and that's exactly what you're seeing because now you've got increased open interest being built the 35, 36, 37, 39, and 40. Like I said, that's kind of like that gamma ramp is happening into June. You're seeing that. You saw this before. You've seen this play out before last year with GameStop. It's the same, almost identical setup, minus any Roaring Kitty post, but it's the same in that there's still a great amount of option premium coming in. There's great volatility. There's good sentiment on the stock. The stock is up. It's moving. So if you look at the gamma exposure by strike, there's a ton of net gamma at 30, but now it's built up because of the activity from last week. So built up even higher. So that ramp. So if GameStop continues on this move at 33, 34, 35, more of those calls go in the money. Then these become closer to at the money. Just creates more upside pressure. More buying pressure, more FOMO kicks in, more out of the money call options you see being traded, and call debit spreads. So, yeah, it could get exciting just like you saw last year. And I'm hopeful that everything you saw last year and all the videos and all my posts have really got you conditioned and educated and set up, to take full advantage of these opportunities. Because the whole idea here is for you to make more money and lose a little less money. That's my whole objective. I just want to see others win a little bit more of their trades, lose a little bit less, manage the risk, add to their education, understand these market mechanics, just so you can find these opportunities. And the largest gamma exposure by strike this week, and then rolling into the June expiry, like we've been talking about, building into that May and June OPEX, into the 30, $32, $33 level. Yeah, like I said before, I said at 26 and 25, if GameStop moves up to 27 or 28, you get more of those 29, even $30 calls in the money, this thing really starts moving. And I said that at 28, or pardon me, at 26, and the stock is closed at 33. That's a $7 move. If you're buying in the money call options, that's about $700 of intrinsic value per call option. So we got you in certainly way ahead of the play as long as you were paying attention. So and you look at that delta too is strong. That delta exposure. That's just as this moves up, things get a little more spicy. Think of that accelerator on the gas. You might be going fast, but then you hit the accelerator and boom, you get a little bit of a turbo boost. So again, building into that the end of this month and that June expiry. So a lot of things shaping up into the June expiry for GameStop. With the earnings that'll be upcoming, all eyes on the balance sheet, what they've done with their cash. Are they going to raise any more cash? Yeah, so a lot going on, and we covered it here during the videos. We've provided all the videos that are also available on YouTube. We try to get you in ahead of the move using the data provided with Unusual Whales. Like I said, don't forget to cash in on that sale as well. Use that link, and you can get yourself a discount. The sale ends tomorrow at Unusual Whales. But yeah, at the time of filming, GameStop 33.80 with the high of 33.97. So we're just a few minutes ahead of the market open, or as I finish recording this. So yeah, welcome back. Hope you had a good holiday weekend. We'll continue covering the flow and continue to watch it. But we got you in here early. At 25, we were talking about the May and June OPEX. The $30 calls. So if you were loading $30 calls, and I kind of had hinted for the June expiry, you're certainly sitting in a very good position. And that's what I hope. I've seen your messages. You send me replies to posts or send me DMs like, hey, I appreciate that video, or hey, I made a few bucks, and I love that. For the ex subscribers, I love when they send messages and they're like, hey, you're making some money, appreciate the posts, or appreciate the opportunity or the idea, or letting me know with the option flow that the also conversely that the idea wasn't going to work out. So yeah, but very exciting. So we'll just continue to watch it. Like I said, just watch your watch your option flow, watch the volume. Look for price at previous levels because you're way above all of your moving averages. If you look over there at top left corner of your screen, there's all like even your 200-day moving average at $25. Let's see, the 50-day moving average at 26, way down here. Even our 9-day EMA is now at 29.52, and the 21 EMA at 28.28. So all the short time frame EMAs have crossed your long. You had that golden cross back here on May 8th, where the 50 SMA crossed over the 200. And the stock there was at 26. So if you just played GameStop based on Golden Cross, that was a short term, medium term bullish Golden Cross. That's what that is. So that was an opportunity. But yeah, that's what I got for you today. Hopefully, you enjoyed the video. If you watch it all the way through, you're awesome. Why don't you just reply down below? GameStop to the moon. For the old sake, I know, for the old times. Just reply to that here on X or on YouTube, and then I'll know that you watched the video all the way through. But y'all have a fabulous day, and let's make some cash and manage our risk, have a little fun, and learn about the markets today. Everybody have a great day, and I'll see you lurking around the internet very soon.